rates are what they are, just like the market is what it is.
Yeah.
You know, so it's like home prices. Like, you know, you and I have this conversation a lot with buyers and with people looking to purchase a home. You know, prices are so high. Da, da, da. Yes, they are. They also were high 30 years ago at that time.
Yeah.
You know, so it's like that's what the market is. Interest rates, that's where we are today. Okay, how can we still maneuver in this market? You know, it goes back to mindset. If there's a willingness to make something happen, you will. You know, and I think that's what separates people that are successful, is that even when things change, they still are trying to get in and still make things happen.
Yeah.
Now, how you buy a property, how you invest might change a little bit and how you do that. But okay, if rates are where they're at, what I know is a lot of people are on the sidelines.
Yeah.
So that's great for someone like myself, and someone that's, you know, maybe even considering buying a house for the first time and becoming a homeowner. Dude, it's a great motivation. Everybody else is hanging out and waiting, and they've been waiting for years. Well, now there are homes. Yes, it's less, but there's homes on the market that need a buyer.
Yeah.
And you should sort by longest days on market and start from, you know, down the list.
I don't know what they're waiting for.
Right, exactly. Yeah, right. Yeah.
I mean, I get it. Everyone
Yeah.
wants to buy a deal.
Yeah, so do I.
It's really a mindset thing more than anything else. Because if you can go buy, let's say you buy a property today and it goes down in value. Unfortunately, it goes down in value. If you bought it as an investment and you did what we did earlier, right, making sure that you can rent it out and make money on the rent, then what's the big deal?
Right.
It went down in value. You're
Paper.
still making cash flow each month.
Right.
So it depreciated a little bit. That's okay. It's going to come back. Now that the market's gone down, why don't you go buy another one?
Exactly. Right. Because you know where rents are.
Yeah.
You know
what you're going to do.
exactly.
You know the market's going to come back up. So I don't know what we're waiting for.
Yeah. No. Exactly. And and with that flip side, if you bought a home for your primary and it goes down, okay. Well, if that's your only property, you have a couple options. Go rent. Okay, that's 100% interest rate, by the way, 100% interest rate that you're paying to your landlord. When you purchase a property, how generally the amortization schedule goes for the first 7 years is 1/3 of your mortgage payment goes towards principal. The rest goes towards interest for the first 7 years, and then after year 7, it's generally 50-50 until the end. So, in the first 7 years, let's say you're down in home value. You bought a property, the next day it goes down $100,000. Well, for 7 years, let's say it took you, extreme example, 7 years to get back to even. Well, 7 years, 1/3 of your payment is chipping away at principal. Yeah. You know, you got tax write-offs. You don't have appreciation yet. But if you were to have rented for those 7 years, first of all, think of how much your rent would be over 7 years, and 100% of that goes out of your pocket. It doesn't go towards paying off your debt. But the great thing about buying today and then 7 in that example is you locked in what your monthly payment.
Yeah.
So let's say it's $3,500. Well, but you could have rented that same day for, let's say, $3,000. You know, that's actually a very realistic example. Yeah. Same property roughly is $3,000 or potentially, and then but if you bought it, it's $3,500 depending on how you know, financing. How long would it have been to get above $3,500? I mean, just a couple years. Yeah. So if you think of it long term, even in worst case scenario, value goes down, you have a fixed payment, 1/3 of your payment, a third of your payment is going towards principal. So you're still, if you have a long term mind, you're still net positive in, you know, generally that worst case scenario. Other than that, I think, again, the best way to buy and invest in real estate is have long-term mind, long-term plans, whether it's your primary, whether it's for an investment, because if you are not looking to just flip in 6 months, and you can have holding power of 5 years, 10 years, 20, you know, plus, it gives you so many possibilities to where you can weather any storm, and that you can make it through that, you know, make it through. So,
I I agree with you, Joey.
Perfect. Dude, thank you. Yeah, thank you.